All right, let's look at the business news. And today is a very big day for the world economy. According to Reuters and other media outlets this afternoon, U.S. President Joe Biden is expected to announce a ban on Russian energy imports. We don't know how long that could last. In news just in as well, the U.K. also expected late this afternoon or early in the evening to announce some sort of restrictions. What has already been announced is a plan by the European Commission to cut Russian gas use by 2/3 within a year. So that does give Europe some time to adjust. It's heavily reliant on exports of energy from Russia. Now, already the price of oil has been soaring to 13-year highs due to the conflict between Russia and Ukraine. And this means that prices will likely surge even higher, cost motorists around the world even more. Should Europe follow suit, if it starts with the US and then Europe, the chance of a global recession even becomes higher. Until now, both continents have been imposing incremental sanctions, possibly hoping that they could avoid recession and stop Russia's advance in Ukraine at the same time. Any sort of ban on energy products from Russia applies maximum pressure on that country by cutting off oil and gas purchases. But economies around the world, like South Africa, will suffer too. So let's look at these prices. This is the latest commodities board, and we can see just after the close of business in South Africa, the price of oil is above $131 per barrel. That is up about 5% on the day. Yesterday, it actually neared $140 per barrel at one point. So while we're not at that extreme level yet, remember, these are levels we haven't seen since 2008, and we will watch the response to the sanctions being intensified all the way to oil and gas exports. Just the expectation of these restrictions has, of course, sent oil to these incredible levels over the past few days, 13-year highs, and that is because Russia is a major exporter of fuel. Now, the good news, if you look at this board, the price of gold now topping $2,000, and the price of platinum also elevated. Now, this is actually good for South African miners, and we've seen that their revenues, their profits are going up. Their share price improved at certain points during this crisis. But when it comes to oil, we as an importer in South Africa are really at the mercy of the global oil price. So now the world is potentially in the eye of an economic storm that affects motorists, taxi passengers, and our pockets. What does it mean for those with invested funds? What does it mean for your pension? The global investors as well. The head of strategy for Amplify Investment Partners, Richard Bray, says the invasion of Ukraine has had a differential effect on markets and a huge impact on investor uncertainty. He joins us now. Mr. Bray, if you don't mind, firstly, your response to the news that the US may announce possibly even a ban, and the UK intensified sanctions, restrictions on oil and gas from Russia tonight.
Thank you, Francis. Yes, it is quite a concern. I mean, further restrictions on the oil production of oil only increases the price to the rest of the world. And that price actually has a knock-on effect on various other goods and services. You know, if you think about food, transportation of other goods and services. So it does drive up the overall inflation effect already in times when we are seeing the highest, some of the highest inflations we've had in a long time, especially in the US market, where currently inflation is even higher than we have in South Africa.
All right, so not good news. I mean, if you look at the conflict overall, what does it mean for investment managers, and what does it mean for South Africans who have invested their life savings?
Yeah, Francis, I think the big thing here, it continues to create uncertainty. The geopolitical risks coupled with then the oil price, and this whole thing, at the beginning of the year where we are coming out of a pandemic where there has been overstimulus in all the economies and the central banks obviously trying to draw that stimulus back in. So that trifecta effect has a knock-on effect of uncertainty and instability on various markets throughout the world, and especially in South Africa. Especially as South Africa is a price taker in that regard. So, the best thing that fund managers can do now, and what our managers are doing, is they are invested in very liquid, high quality instruments where, on a daily basis, it allows them to trade and be agile with developing news and how stories break.
So give me more, because when COVID hit, remember, there was panic, there was alarm. The next thing, the markets were flying, and we saw a lot of people made a lot of money because of the stimulus measures, things like that. Perhaps there's a lesson in there to keep calm when there is global panic like now.
Absolutely. I mean, we saw that in the height of March, April in 2020, investors withdrawing all their money or moving out of equity markets and into cash with the whole thought process of we're going to protect. And within months, we saw the markets rebound, if not a bit higher, because of this, this flood of stimulus that came into the markets. And from an investment point of view, those investors that sold out of their equity investments, locked in their losses, went into cash, and when everything rebounded, they actually had a huge detriment on their retirement savings. So, the big message we're trying to give our investments are keep calm, keep a cool head, trust your investment manager that they know what they are doing, and allow them to make those asset allocation calls in your portfolio on your behalf.
Yeah. And in COVID-19, we saw that there were opportunities. It seems a bit macabre to talk about opportunities when there's war, but will there be good news amidst the news we're hearing about oil and energy and trade disruptions to a whole lot of important things around the world?
Absolutely. Without sounding too cliche, markets work in cycles. We've been through these geopolitical risks before. We've gone through a COVID. We've gone through the credit crunch in early 2000, in 2007, 2008. We've been through these volatile times before, and there is always a silver lining to all of it. And it is only in time that these things play out, but it is to keep a cool head through that process. And I did mention earlier on how trust your investment manager and what they are doing for you. But it is very important that these investment managers aren't getting locked into positions through various shares or maybe local credit, etc., where you can't actually sell out of those positions. So it is important that they have a very liquid asset base within the portfolio that they are able to trade and take advantage of these opportunities. And specifically, you even find people like hedge fund managers who, when the market is down, they are actually able to generate meaningful returns for their clients, even though the markets are down.
All right, finally, I know you're an advocate of socially responsible investing. Is there still scope for that? And can you still protect the rhinos and still make money in this market?
Absolutely. I think every asset manager has a reason or rationale to be a good corporate citizen. So, for us, and obviously with Women's Day around the corner and everything, International Women's Day, for us, it's about driving gender equality in the workplace, as well as actually our conservation efforts that we do in line with the Sustainable Development Goals of the United Nations. So as much as there is, a war pretty much going on and people, there are other concerns, I think it is still a good point to consider and to carry on doing good in the world around you for future generations. And the purpose or the point of why we try to do what we do by aligning with the Sustainable Development Goals of the United Nations is to provide purpose for our clients, so that when we hit these disaster moments or these times when people want to make knee-jerk reactions, they have purpose for their investment. They understand what the long-term objective is. And that ultimately is what you're wanting to try and do, is you're trying to keep your client on their track to achieving their financial goals.
All right, thank you very much. That was Richard Bray, Head of Strategy at Amplify Investment Partners.